Kwan.
Hold on, Steve.
And,
Hold on.
sorry.
Hi, welcome to Genius Wednesdays. This is Christina Brujan, COO of Coin Genius, here with Steve Kwan and the Team Genius, here with your market analysis for the week of December 18th. It looks like Jeremy Boyer has also joined, and we will turn it over to Steve Kwan to kick off this week's analysis.
Hi, my name is Stephen Kwan, and I'm with the research department of Coin Genius. And I wanted to start by, I know many people are on holiday or are planning, so I'll keep it rather brief and kind of recap a theme that started last week. Last week, there were three major macro events that have been market movers over time this whole year. One was the FOMC meeting, which is also known as the Fed meeting. The next day was the UK election. And that same day was also the ECB, also known as the European Central Bank. All of which were basically along the easy monetary policy and friendly to Brexit, which gave the British pound a brief up move followed by a give back. And over the year, or over the past 4 months, the pound increasing has been negative towards blockchain, specifically Bitcoin, since it dominates the blockchain. Now, I didn't want to make a specific price call, and I don't always advocate, hey, there'll be volatility or this is going to move. It's either going to go up or down X amount, because I feel when you say something too often, people stop believing you. But last week, I did feel strongly that Bitcoin specifically and the rest of blockchain would have a 6 to 7% move one way or another, and I basically said 6,600 or 7,700 would be the points at which we would be talking in 1 week from then, which is today. And lo and behold, we've seen, I guess, a nasty, fairly significant sell-off in Bitcoin, but it's really in the other major projects, you know, your Litecoins, Ethereums, EOS, Cardano, Bitcoin Cash. I can go down the list, but I think we get the point. The CMC or the Coin Genius, basically 2 through 20, all things not named BTC, have gotten rocked even worse. And the concerning, there's basically two ways I'm starting to look at this. The powers that be are begging people to get out of Bitcoin and to get into something else because other things are becoming, how can I say, they're reaching levels that have not been seen in years. I can't. The last time that Litecoin was under 600,000 Satoshis was early 2017. You're almost having to go back to 2016. So, in my mind, the number 2 cryptocurrency, not blockchain project, I'm going to exclude Ethereum from that since it's a smart contract. But you're reaching points where if you're not interested, if that's not something that even piques your interest, entering into a Litecoin transaction at 570,000 Satoshis or under $40 or in the $30 handle, I guess I'm not really sure what people are looking at. Now, that said, the last conversation we had, the landscape of the top 20 and really the top 100 seems to change every 6 months. And I'm also starting to wonder if those that were the leaders of the 2016, 17, 18 rally have seen their better days. I don't know. I just knew that those 3 triggers would cause a move like this. The concerning part to me is that when Bitcoin increases, at least this year in 2019, when Bitcoin increases, it's increasing at a faster rate than 90% of everything else, maybe 95% of everything else. But most recently, when Bitcoin decreases, 95% of everything else is decreasing at a faster rate. So your Ethereums, Bitcoin Cashes, Dogecoin, Chainlink, Cardano, EOS, Litecoin, they're falling faster and not increasing at the same rate as Bitcoin. So I'm really kind of baffled by the Bitcoin dominance thing where they're underperforming every which way, and that is more of a concern to me. But I would give myself a slight pat on the back for saying that those three events would be the catalyst for start of a major move. What happens from here? I'd have to go back to the drawing board. Those three events were the catalyst to get from 7150 to 66, 6700, what have you. Now what happens? I would have to do some more research and look for the next week. Also, that said, December 24th is the 5th business day prior to the end of the year. So I know that many redemptions and allocations are done over a longer time period, but there's what I call the old guard, probably people of my generation and older, that still believe in these theories, and sometimes enough people believing in the same theory ends up making it a truth. So I would be wary of the last 5 and first 5 days and just look at those trends in Bitcoin and other large instruments. And that can be said for not only blockchain, but S&P, crude, gold, fixed income, where if one does not have a specific agenda at set prices and set numbers, sometimes the best thing that I've learned to do over the holiday period is lock your account. Sounds goofy, but sometimes the best trade and best position is no position. And on that note, I will pass the mic to the other geniuses on the call.
Thanks, Steve. I'm going to pick on Tim Hesselsweet here.
Thanks, Christina. Just a note of maybe caution on a longer term basis. We had seasonal bullishness for the end of the year that is not particularly playing out here. And as I look at some of the longer term Coin Genius indicators, the Bitcoin price is now trading nearly 20% under its 200-day moving average. In terms of where that percentage falls, looking back on a 2-year basis, we're in the bottom 6% now. So the sort of price trends have been fairly weak, and yet at the same time, volatility is low. It's in the on a 2-year basis, it's in the bottom quintile, I guess, the top 20% of low volatility readings. So what we're seeing is sort of like weak price momentum, and at the same time, we're not at something that looks like a kind of like a washout low. So I think probably we're bullish long term, but I don't see easy trading, easy hodling conditions right now. I think that the volatility could pick up, and that's going to be good for shorter term traders. But I don't see a smooth ride at this point.
Thanks, Tim. I'm really glad that you picked up on, or rather that you reported on some of the indicators. I'm very interested to see the fear versus greed and the bear versus bull. But the volatility is very interesting to me. And I think we kind of said it in the last few calls, which is it just kind of felt like the market was waiting for things to happen. And then we had these meetings and now we have all this volatility. So, well, it's still lower volatility than we would expect to see. So, I find it fascinating to look at the traders' behavior here more than the coin's behavior. And I just feel like November and December really are ripe for some patterns for the capital markets.
Christina?
Yes, sir.
And here, there's one thing I guess I'd like to add personally, because I hate when people do it in equities, and I think I just did it myself. Bitcoin being up $500, many would not consider that volatility. It's like, oh, it's having a great rally. But Bitcoin down $500, it's like, oh, whoa, there's a lot of volatility. Where, to be honest, we all know we can all log into Binance or whatever your preferred trading mechanism is. One button's red, one button's green, or one button's red, one button's blue. Clicking buy versus sell is just as easy. But I do believe, obviously, that there's more longs than shorts, hence how the price has risen over X amount of years. Now, that said, in all things not named Bitcoin, I am under the impression, I'd have to get some more empirical data on this, that there are quite a few leveraged shorts involved in many of the major projects not named BTC. So, believe it or not, the volatility part of that trade will come when Bitcoin is under pressure and the other things actually rally. But that's a hard message to get through to, I guess, the masses when they've been, kind of burned buying, the other large projects. So I just wanted to interject there where Tim Hesselsweet pointed out to me, implied volatility is fairly low. Like, we're not seeing a lot of down 3%, up 4%. It's just kind of been a methodical slide. Like, oh, wow, Bitcoin dropped $200 today. Oh, it dropped $50 in the last hour. Oh, it's down $100. Where is 7% in a week a significant amount? Yes, but it's been almost an orderly exit. And I don't know. I'll leave it at that. I think I made my point on the late edition of the story of a mysterious $2 billion that was stolen in Bitcoin that's being dumped on the market. But notice that story's after the fact, and that's all for me.
Thanks, Steve.
Yeah,
I'd like
that's
to pick on
interesting.
Jeremy Warren. Thank
I'm
you,
sure
sir.
you would.
I'm glad you're on.
Yes. Yeah, no, I agree. The $2 billion thing, that one coin, is very interesting. A lot of people are thinking that the volatility is based on that, and people flooding the market with the Bitcoin that are stolen. Actually, Chainalysis, which is a very notorious firm for looking at blockchain transactions, and brought down that child pornography ring recently based on blockchain transactions via Bitcoin. Recently, also did a study. I think they just released that was leading, I think, to the conclusion of exactly that the scam where they bought this $2 billion in is indeed impacting the market, and they're the primary cause of this, trying to drive the price down so they can come in and buy yet again at the bottom.
I'm sorry.
Yeah, this is not trading advice, but if you're following and you feel like, things are on sale right now, there is a term called buy the dip. And I'm not giving anyone trading advice here. I just know that, the way that I'm looking at my strategy is certainly to view this as a positive, as that there's kind of a Christmas clearance sale going on right now.
Definitely not financial advice, but Warren Buffett, I'm probably going to botch this, but they buy when people are fearful and sell when people are greedy. It's really, really hard to do, right? Because I always get to that point, at least personally, and this is why, we created Coin Genius, is so you don't have to rely on your emotional response to a trade by seeing numbers on a screen. You can use sound metrics to help you make an informed decision. If I was just using my emotion at this particular moment, this is pretty intriguing to sell a position because you think it might go down to 5,500. But at the end of the day, when you have an open order on the books for 5,500, and then you see, the Bitcoin price go from 6,600 to 6,800 in just a few minutes, you get a little nervous, like maybe I'm going to actually miss out on this. So then you cancel your 6,500 order and you go buy again at 6,800, and then you lost out on $100 and that differential. So this is just the vicious cycle that a retail investor goes through. This is a position that I've been in many, many times, and this is once again why we're creating Coin Genius for the average person to take the emotion out. Because if we just relied on ourselves to trade effectively, we'd lose pretty much every time.
Yeah, I agree with you, Jeremy. This is Tim Bogert speaking. But one of the things that a retail trader can do to mitigate any kind of loss is to go in, perhaps if they think it's a sale at 6,700, and put a stop loss in at 64. So that, they can protect themselves if it goes down further and they're not going to lose their whole bag. And then they can watch it, whether it goes down further from there, buy back in. There are things you can do to protect yourself.
Again, not trading advice, just educational information for folks.
Yep. I'd be actually
Jeremy, I'd love to hear from Samson, but I'm sure that you have a few, I'm sure that you have a few observations from this week as well before we pivot to Samson.
Actually, that's exactly what I was going to say. From a psychological perspective, in line with what I was just saying, I'd love to hear from Samson because I know he's really in tune with human psychology and how people react based on certain stimuli.
Hey everybody, this is Samson Williams. My only qualifications for being in tune with human psychology is I've been a human for almost 4 decades. Granted, I've been confused for most of them. But one of the things I do notice, no, it's true, I've been very confused for most of my life. So in 2017, when I was talking to the folks on Wall Street and we were looking at the bubble then in December, they were all going on vacation. And so they needed to cash out because, it's very similar to playing poker. And when I had my first business, I used to play sit and go poker tournaments. But occasionally I needed to leave, so I just cash out. And so in that instance where Wall Street is going to go on vacation, they're going to shut down, they want to take off the rest of the year, come back in the new year, and they want to just know how much did we make for this year. And so I have a sense we'd have to check this, that every week leading up to Christmas, you see movement in the market because folks are cashing out. Because 3 of my notes from listening to the conversation is, what is the Bitcoin narrative for institutional traders, not hodlers? Because hodlers, they're going to hodl. And so they're not really, they in theory, they shouldn't actually care what's happening in the market. But what's the narrative for institutional traders? And for them, they need to have their numbers in for the year, so they have good performance bonuses come February or March when they're allocated. And so what's the narrative for retail investors? And so retail investors, they might not be as familiar with the markets, familiar with the emotional roller coaster that can be the markets. But if there's a psychological / emotional roller coaster in the market, what is causing those ups and downs? It's typically other humans doing things to push or move the market. And so I appreciate the narrative about the plus token that's happening in China. And so, because that's like, hey, here's some FUD, but you actually need the FUD because the FUD, the fear, uncertainty, and doubt, it helps with, at least in my opinion, again, this is not trading advice, it helps with understanding like people are having some uncertainty or fear at this moment, or they may have it because of X. And so then you can choose to, break out your nachos and buy the dip, or you might choose to trade because you're sensing that there's a bit of emotional insecurity in the market. But generally thinking, I think that if we look historically, I know there's probably some data on this, that week leading up to Christmas, there's a lot of volatility as folks sell. Then there's the dip. Then people are like, oh, everything's dipped. Let's pick up some Christmas clearance. Let's pick up some coins on clearance for Christmas. So that's where I'm at the moment. I'll have to think about this some more because also last week or this week is the anniversary of the highest, the second anniversary of the highest value for Bitcoin in 2017. And so there's probably some folks with some superstitions who say this is what happened last time, this time of the year, and I'm going to cash out now, or I'm going to make some trades now based upon what happened last year. And that can become a cycle in and of itself, because humans love anniversaries and are and I don't think there's a more superstitious person on the planet than a trader. And so we'll have to see how that continues to develop.
Thanks, Samson.
Yep, agreed. Love to hear from Dennis from your perspective and coming from the financial world as well, in terms of what you think the mentality would be of folks, especially institutional and hedge funds in the space at this point.
Yeah, I mean, you don't necessarily need to sell anything to actually lock your gains in, because it's, you know, it's realized versus unrealized within the institutional. You know, retail investors tend to sell at Christmas because they want the money. If you're a hedge fund, it's literally, it's an unrealized gain that you're actually booking. So, I mean, in terms of that, I think you can kind of factor that out a little bit. Going back on some of Steve's points in terms of, the sterling jump was basically, the markets like certainty. So when you get an unexpected majority for one party or the other, and I don't think it actually mattered which party, you're going to see a jump in the currency, because they know, they've got some certainty going forwards as opposed to some uncertainty. So I think that the kind of jump in sterling, not a massive jump, but it's largely been fairly well maintained. It's trading around, the mid 130s range. I think that's sustainable right up until somebody does something stupid again, which is probably overdue after a week after the election. The one thing I was looking at was, and Samson just mentioned it, I mean, 2017, 4 months after the high, you saw the market drop probably 65%, I think, in Bitcoin. It went from north of 18,000 to in the mid 6,000s. What we've seen is, in 4 months, Bitcoin's gone from probably the high 11s, so 11.7, 11.8, down to, I think it was 66 this morning. So you've seen sort of you've seen a drop of 44%. So I'm sort of looking at it thinking that, maybe certainly from my perspective, I think that the fair market value of Bitcoin, in my mind, has actually been adjusted up. And I think part of that, and I don't know whether it's psychological, is that I truly believe that there is a certain amount of maturity around Bitcoin that doesn't exist in some of the other cryptos. So people are far more accepting of Bitcoin, can see its usefulness, and will accept it at a level above where it once stood. So if you look at the run up to get to that 18,000, for the year before, it was probably trading in the 2,000 range. And then it ran all the way up to, the best part of 19,000. If you're looking at where it came down to, it probably came down to maybe double. So in the 4,000 range at a low point post 2017. And I think you're looking at, people probably see that as the new low. I think you've got this head and shoulders effect. And I think, the shoulders of that chart, if you were looking at it on a classic chart, to me, sit around the 4,000. That's where I've got the floor in. The other thing about institutional traders very seldom ever try to pick the bottom. That's a losing game and a losing proposition. So at some point, if you've got a buy or a sell conviction, you don't necessarily wait for the bottom of it. As you were saying, Jeremy, you suddenly decide that, it's gone to 66, maybe it will go lower. If you actually believe in terms of your sentiment that that's where it's going to go, you buy and you basically stay in that direction. The retail investor may move around, the institutional investor won't. As one of my friends once said to me, look, if you liked Bitcoin at 10,000, you must absolutely love it at 6,600.
Yep, that makes total sense.
Hey, Dennis, Jeremy?
Yeah, go ahead.
Can I interject?
Yeah, can you?
The one, and this comment has zero to do, what I'll say, with what happened in the alt space in January. But in December, I want to say December 17th of 2017, that was the first day of trade in listed Bitcoin futures where the public, for all intents and purposes, had been fed this piece that, oh, Bitcoin futures are coming, so the public bought them the whole way up. And you'll see, you can literally look on a chart, first day of trade, all-time high, the exact same print. Like the first trade in Bitcoin futures to the minute was the all-time high trade. And 10 days later, they were sub 10,000, so cut in half. And I think that's the one, I guess, note that I would just put on the 2017 trade, that there was an event, I guess, Bitcoin futures being listed publicly, not through some exchange that people might not be unfamiliar with, but the CME and the CBOE. And that was essentially the hype train that got people in and a week later got people out. And that's simply just from charts and volume. That there's no opinion in me saying that. It's just a fact. So I just wanted to add that.
Yeah, I mean, I look at it, Steve, like a standard business S curve. You've got the early adopters who are on a much, much lower gradient. And then when you get market acceptance, which you correctly said was the ability to trade a futures market with it, suddenly that curve goes very, very steep, and then it flattens out. Yeah, because once people can do that, they can decide what they want to do. It took about 4 months for it to actually drop. I mean, to drop to 10,000 took a month to actually go down. So it's, but as I say, the difference is if you can trade futures, you can make it go down as well as go up at an accelerated pace because the liquidity is there for you to do it. Whereas if you think about, if we physically had, I know this is an awful parrot like oxymoron, but if we physically were exchanging these things called Bitcoins in an over-the-counter market where we physically went and did it, the liquidity just wouldn't be there. So I think you massively increased liquidity on that one. I do see, as I say, I don't see it personally. Drop. I think the floor is much higher than it was 2 years ago.
Agree 110% on that one.
Agreed.
Too. I mean, Dennis, you said it more eloquently than I, but we all can pull up some ladder, buy sell ladder of whatever future, whether it's bonds, sterling, gold, Bitcoin, shitcoin, ditcoin, and one button says buy, the other says sell. But the one difference for 90+% of people is that they have to buy first because they have a smaller capital base and are unfamiliar with futures or structured products that allow one to initiate with a short. Hence why it always feels like there's more volatility to the public when things go down. Like, Lord knows, if Bitcoin goes up $10,000 in the next few months, I bet we'll hear very few words about volatility. We'll hear rally, Lambo. What are the other ones? Mooning. I don't know. I guess I think of mooning to someone.
Melt up.
Yeah, melt up.
Yep.
You know what I'm saying? Where those parabolic moves are considered good, but let's keep in mind, like you said, the liquidity provider who has the ability to buy and sell short and long to initiate, he's feeling some pain on that because he's the one that filled those orders. So it's just, is it the majority or the minority that's really getting those gains and or losses?
I mean, I'm not seeing volumes. Jeremy, are you seeing? I mean, in terms of volumes that are driving this down, I don't know what the volume actually looks like against the moving average on the price, but I'm not sure in terms of the actual volume that's being traded. I don't have any visibility to that where I am at the moment. So it'd be interesting whether this is just a drift or is this actually being driven?
No, this is, to our analysis, this is being driven down. I don't think it's being driven down as dramatically as it was in the past, right? Going down from 19,000 below 10,000 is a very dramatic shift, and you can see that in the volume. This is much more calculated, and it's almost like flooding the market with Bitcoin with a small amount over time. However, one thing I'll say is that there's so many different ways you can approach this market and so many different things that you can look into to determine what is actually driving the price down. That's really the holy grail. What impacts the price? What impacts volatility? Because there's crypto sentiment across social media channels, news. There's things like, and thank you for correcting me, earlier, Samson as well. Sorry guys about that.
Sorry, we have editing powers.
Yeah, exactly. So thank you, Samson. It is the plus token. I think I said OneCoin or something like that earlier. It could be something like that. I know we had Mt. Gox is always in the background, obviously, and this is something that people are speculating was driving volatility in the past as well, as people were starting to bring some of those funds into the market as well. And then you can look at things like mining, something that we usually don't talk about. But if you think about miners and talk about the upcoming halving, mining overall is not very profitable at this particular moment. So if you're a miner, you're trying to recoup some losses that you have, especially in going to the halving, because the block reward is going to be cut in half. So with that said, if I was a miner specifically and I wasn't making money, I'd be selling my Bitcoin, which we're actually seeing in the charts that people actually are doing. They're selling their Bitcoin. They're trying to recoup some of their losses. So when the halving comes and the block reward is less, then at that point, there's not going to be a reason for them to sell. So if people are not selling at that point, and the miners that hold a tremendous amount of Bitcoin, you're not even going to necessarily need to have people flood into the market or retail investors start buying up Bitcoin. Inherently, the price will start going up because they're not going to be selling anymore. So, I mean, there's so many different approaches and theories to this, and I think that's where we come in. And what we're trying to build in this platform is the ability for anybody to take a look at a number of these different metrics so they could really make their own determination as to what they think is working, what's most important to them. Of course, from a back-end perspective in machine learning, that's where we put in some of the models to really analyze what has the highest probability of being the catalyst for impacting the price volatility of particular assets, not just Bitcoin, but some of the top currencies as well, which kind of plays into our indexes that is led by Steve Kwan and Tim Hesselsuite to really analyze a certain basket of assets in the cryptocurrency space and see how they're reacting to particular stimuli, such as what I just described. So pretty exciting stuff. With that said, there's a lot there to unpack, but I believe Matt Shellhouse also just joined us. So I'd love to get his perspective based on the conversation, because I think he comes at it in a completely different way as well.
Hey there. Sorry about that. Just
More editing powers.
Is Matt with us?
Hey, Jeremy, I have
like
one quick question for you.
Sure.
And I know obviously block times vary, but or anyone on the call for that. Does anyone know approximately the number of Bitcoin mined per day, like to the nearest 100 or 1,000?
I mean, I have the metric somewhere, just not in front of my computer.
I saw a note saying that Bitcoin mining was actually on the increase at the moment. As I say, I think it's driven by what you just explained, Jeremy. But you know, at the moment, like mining is actually, I think I said it an all-time high.
Right. So, I mean, if you think about mining, right, there's a lot of people that are probably coming into the market at this particular point, especially those who have a tremendous amount of hash power based on the mining equipment that they might have. Because if you think about it, this is expected. More miners are going to come into the space, especially last minute, especially as they catch wind about their graphics processing cards, their GPUs are able to be utilized to be able to mine Bitcoin. And Bitcoin right now, you can get it, a certain block reward, and that literally gets cut in half next May. Right. So there's inherently going to be a lot of people that come into the space and they want to get that reward prior to it cutting in half. Now there's a tremendous amount of people, you think about the Bitmains of the world and some of these large mining operations that we know hold, thousands of Bitcoin, right? Those are the people that probably are coming into the market and trying to recoup some of the losses because they have the most to win and the most to lose at the same time. So it's interesting to see, but I think what you're seeing is very expected. The other thing I would say is, I don't know if anybody has looked into this at all. And Steve, I'd love to get your perspective. You can even look it up on Google, stock to flow ratio. That's a very interesting one that I'm seeing surfacing a lot on social media as well, that people are looking at, and the charts are actually pretty compelling as it relates to anticipating, where all the prices are going. So I'm not sure if anybody's familiar with that or anybody has analyzed stock to flow ratio as it relates to Bitcoin, but that's pretty interesting.
Thanks, Jeremy.
I'm happy to take a look at that for next week, or actually for not next week because it's Christmas next week, but for the upcoming 2 weeks, I'm more than happy to take a look at that.
That would be great. Awesome.
Hey guys, sorry I lost you.
Cool.
I'm back.
Perfect. Matt, let me do a real quick re-intro here, and then we'll have to edit some of the things to splice it together. So,
Okay.
Awesome. Beautiful. Well, on that note, Matt, would you like to give us your analysis for the last few weeks here?
Sure. Okay. So, in terms of the Bitcoin price and what we're looking at, or where probabilities are, and I would state this, and just in terms of risk factors. So, seasonally speaking, when you look at traditional markets, December is typically a good month in terms of performance. In fact, I think it's the best performing month. And this year, when you couple the seasonal factors with the fact that we got this supposed trade deal that's in effect, you see the S&P and indices, global indices, just ripping through the roof. That being said, how does that translate to digital currencies, which I look at as an economic subculture or an alternative investment asset class? It's not favorable in terms of public crypto market valuations, or in terms of capitalization of BTC and other digital currencies, and here's why. If you're a traditional money manager or an institutional investor, or somebody who's looking at ways to make money for their clients, what's the motivation for you to put in the research and put money to work in a speculative ecosystem when the returns you can get in traditional markets are amazing? So for me, I look at, let's just say this: if we can agree that, or we believe that this space is dependent upon new inflows from new money for us to reach new highs or get a big rally here, I look at it as the exact opposite. Right now, there isn't new eyeballs looking at this space, and with public crypto markets, approximately 40% of the total float as hodlers, or people who are just here for the happening, or some kind of this is this is going to go to the moon. I see that as a perfect setup for a potential big risk to the downside. So if we look at price right now, like floating around, 6,600 or where we're at right now and change, think about the amount of stops that are aggregated or aggregating around, between 6,500 to 6,000 or down to 5,800. If there isn't sufficient, demand right now or new money coming in or people buying, there's a big chance of us getting some downward pressure here. So just to kind of organize.
Agreed.
Exactly. So it's like for me, like I feel like a stop loss kind of Armageddon scenario is setting up where there's no real, headline risk out there. When I say risk or headline news that is coming out that's going to, get people just frenzy of buying taking place. What I would say is that when we look at price, a lack of demand or neglect, if you will, sets us up for a scenario where a lot of the money that's just positioned here for the long term hodling could get wiped out, and or just a lot of stops getting ripped through and a lot of people being positioned wrong-footed. And here's the question that I propose to everybody. What is the probability that the halvening has already been priced in?
Yeah, we've spoken about that in some of our R&D calls and Genius Wednesday calls as well. We saw that with Litecoin, right, where it was priced in significantly comparatively to previous halvings. So yeah, that's a really good question. I think really what it comes down to is, your analysis is spot on in the sense that is, so if I had to do my analysis and just looking from a technical perspective, I came to the same conclusion as what you just came to right now. The only problem, and this is where it becomes very powerful to, take the approach of what CoinGenius and others do, which is looking at not only technical indicators, but also looking at like more fundamental analysis, right? So if I layer in the fundamental analysis and I'm looking at like soft indicators such as sentiment analysis on Twitter or Reddit or news, etc., which is really meant for misdirection, right? It's misdirection everywhere, whether it's for political campaigns or for digital assets or stocks, right? So if I'm looking at the misdirection and looking historically in terms of how people have leveraged these social media platforms to inherently try to manipulate the price in some capacity or misdirect the retail folks, I'm looking at what you just said in agreement, and then you go to social media and then you realize that everybody is calling for the bottom, right? And the bottom being much lower. And that's an interesting point, right? Because people are trying to artificially move the price down, which usually means that it's going to swing to the upside. So it's an interesting play right now in terms of what to do, because you see the technical and fundamental analysis are really at odds with each other right now because they're saying two different things. And I'm not just saying Twitter sentiment alone. I mean, there's a lot of other fundamental analysis that goes into it, including developer activity, including blockchain capacity utilization index, and a lot of other things that we kind of track. So it just, once again, it kind of leaves the average person very perplexed as to what to do.
Yeah, and like for me, it's like quote George Soros, discount the obvious and bet on the unexpected. And I feel like the consensus for the crypto tribe, if you will, is that the halvening is going to be the exogenous or endogenous event that's going to drive us to new highs. And if history of markets are any indicator of what might happen in the future, I mean, anytime consensus is baked in, you do the exact opposite because everybody's positioned to capture that kind of scenario. So for me, I'm not saying that it is priced in or it isn't priced in. The way that I think is I always look at the worst case scenario or try to assess the probabilities of something like that happening. And for me, I feel like there's just a perfect sea of, it's a kind of the perfect storm for a breathtakingly, breathtakingly low prices, potentially us seeing in the short to medium term. And again, that doesn't, long term, I'm a bull, and I really feel like as we get closer to the election here, I mean, that's potentially going to be a catalyst that really does drive us to those higher highs, coupled with the halving and all these other things. But yeah, for me, it's like consensus is long. I sent Christina and I think as well. Let me see if I sent it to both of you guys. Yeah, I sent it to both of you guys on Telegram. It's funny, Jeremy. Peter Schiff tweeted on Twitter,
oh yeah,
get ready.
I love it.
I mean, he's a total blowhard, and I just take everything he says with a grain of salt. But
well, what was let's actually go over what it was that he said, though. Okay, that part's important too.
Yeah, so he said the good news is that all the millennial Bitcoin hodlers who are about to get wiped out in Bitcoin are still young enough to make their money back. They will also have a lifetime to benefit from the wisdom that comes from losing money and leaning on your mistakes. So, the fact that we have like this binary distribution of opinion, with the crypto tribes, and the Moon Boy Brigade, and then you have like, the haters like Schiff and what's the other guy's name, the Nouriel Roubini and all these guys coming out, seeing what I would bet is a similar analysis that I have, that hey, why would anybody or any institutional managed money, yada yada, put new money to work in an unproven, risky asset class that they don't understand and they perceive as a security risk, and kind of devoid of intrinsic value. It's an extrinsic value play. So for me, I say, well, I would say that probability is that we just float sideways for a long time. But if I had a bias, and I was, managing a big portfolio here, I would definitely hedge out any risk. We get like a big wick down to like 5,800 or even below, and look at ways to generate money or interest in a sideways market.
I think we just did get that wick, actually. I think I just saw that wick happen.
Hey, Matt.
I think it was maybe earlier today, down to 5,800.
Can I echo something that I think Matt said, and I'll paraphrase it in ways that I've learned, is oftentimes, and I get it, that most people are not going to pay for news where it's like, yeah, we're not expecting Bitcoin or gold or SPOOs or NASDAQ or Euro or pound to be flat for the next 12 months. I know that's obviously many are not going to pay for that news, but that seems to always be the one market move that people are not really ready to accept. It's like Bitcoin went from 1,000 to 20,000 in a 12-month period. Here we sit 2.5 years later, and it's 7,000. It's like, oh my gosh, the sky's falling. It's like, well, here, I'll give you a relationship that I look at. In the spring of 2017, gold was $1,250 and Bitcoin was $1,250. Now, fast forward, I look at gold, it's $1,475 and Bitcoin 7,000. So he who is using a metric of something that's, I guess, finite versus finite, Bitcoin has still done tremendously well. I'm not going to say the same for every other asset, but there's also, I guess, one camp that it's like the early adopters, like Dennis was saying, the guys that bought in at 500, 1,000, 2,000, 3,000, like they're not really, I'm not going to say they're not feeling it, because I'm a believer in whatever the last price was. Anyone who's long Bitcoin, I don't care if you bought it at 10 cents or 20,000. We're all long it at 6,700 or whatever the last tick is. That's everyone's mark to market. The other thing I would echo that I believe is the vibe I got from Matt is there has, and I learned this from some guys that 7, 8, 9-figure guys, where they'd always say, Steve, for a bottom, you need to have massive leverage shorts. And I'm like, well, of course. They go, no, because those are the guys that cause the bottom. It's not a guy that walks in with $6,700 and goes to Coinbase and buys one Bitcoin and says, I'm hodling. He's not the one who's going to cause the bottom most times. It's the guy that walks in with $67,000 that says, I want to trade 100 to 1 on BitMEX, and he's been long. He's down to his last penny of margin. He decides to flip to short. Those are the kind of events, and those are not the best metrics that I can measure, although I'm betting there are some on the CoinGenius team that can. When you start to hear people, when there's massive Twitter push about Bitcoin going to 3,000 or Bitcoin going to zero, anything going to zero or this is going up forever, this is never going down, this is never going up. When you start to hear absolutes in Twitter and Reuters and Bloomberg, when you see the CNBCs getting experts on, they're telling you Bitcoin's going to zero, that's when you have a massive, massive bottom. Or when it goes to 20,000 again, and people are like, I would mortgage a second house that I don't have on a credit card using a payday loan to buy Bitcoin, that's when the top is in. And those are just things I can't measure with exact numbers, but have just learned from experience using absolutes. And I honestly, I still feel like it's just in this big range, like 6,700, 7,700. Sure, my volatility call was right because of 3 events, but like what really happened for somebody that owns 1 or 2 Bitcoins? Okay, they lost $500. They're probably not going to change their holiday season. Sorry for the rant, but that's my 2 cents.
No, I agree with you, and for me, it's like the likely momentum of status quo in terms of traditional seasonality trends and all these kind of stuff are likely to just keep things as is in terms of money moving around. So it's like in an environment like this, like it's just I don't know. For me, I would say like the aside from a couple of big wicks down, I don't see this as like a critical phase where we're gonna end up with some kind of revulsionary apathy where people just aren't buying digital currencies or BTC. I would say that the most likely probability, because there is such a polarization on opinion, right? Like with the haters really hating and the moon boys really moon boying, whatever that means. That the most likely scenario is just like drifting sideways until we get a big new event where people are looking at this space with vigor. So anywho, yeah. and also too, on a side note, I heard you guys mentioning the British pound earlier, with the sterling, and I posted a chart, a couple of charts in Telegram. Jeremy and Christina, did you get those?
Yeah, I just saw one come through.
Yeah. So if you look on the daily, I mean, it's clearly an overextended rally. And then if you look on the weekly, actually, and you do a trend line from the peaks down, the latest candle in terms of, on a weekly chart, is actually a bearish engulfing channel, or a bearish engulfing candle. So if you were just to look at this, just strictly from classical, with classical TA methodology, I mean, you would basically say that this is not a bullish chart. It's actually quite bearish. But again, I'm just looking at this from a TA standpoint. So it's going to be interesting to see how much follow through there is with this Boris win and all that kind of stuff.
Yep, agreed. Well, I know we're running out of time here. I usually don't do this, but I'm going to actually make a prediction, right? So we actually have it recorded just in case I'm right. I'm just taking this prediction and just kind of putting the lens on in terms of what I've seen in the past from a market manipulation standpoint, not necessarily trying to manipulate the price, but trying to influence others to act accordingly based on certain stimuli. So if I was a whale and I was trying to move the price and I was trying to make sure to psychologically break people to the point to where they either gave up, to where it created a tremendous buying opportunity for me, kind of in line with what you said earlier, Matt, about, inherently there's this dichotomy between, the people that are, like you said, the moon boys. I like that term, versus
the moon boy brigadiers.
The moon boy brigadiers, exactly, comparatively to people that, really think the price is going down. So because there's a tremendous amount of hodlers, and I think there's a lot of hodlers that are waiting for this halving event because they feel that that's the catalyst to be able to, make that price shoot back up in excess of $20,000 of Bitcoin. If I was somebody that was trying to take advantage of that and strike fear into people, what I would do is I would target that date specifically in May on that halving event. And what I would do if I was them, right, and I'm putting myself in their shoes, is I would artificially and slowly inflate the price of Bitcoin. Sorry, somebody's got a lot of feedback. You can go on mute. There's a lot of background noise. Thank you. I would artificially increase the price slowly. I wouldn't do it in a dramatic fashion, all the way leading up to May, to give an indication to the public that indeed their theory is correct, that the halving is going to be the catalyst of, this massive run up in price in Bitcoin. And then what I would do is, as soon as that day hit, I would basically flood the market with Bitcoin, drop the price, and crush everybody's hopes and dreams, and get to that psychological low of that 3,300, 3,500, which basically broke most people and made most believers actually give up, thus creating one of the biggest buying opportunities in the last few years. And then, as we've seen in the past, post-halving, it's typically taken 130 to 300 days for a high to hit post-halving. So that's exactly what I would do. So that is my prediction. If they repeat the cycle of what I've seen them do in the past, that's exactly what I think they will do. And they, meaning the people that are holding the most money and the most BTC, that are trying to create the biggest buying opportunity for the long term.
I think that's spot on. The only thing that I would say for me is, looking at market structure right now, I would say it's almost a perfect setup to crush all the hodlers. So you can just wipe out a lot of buying interest, scoop up all of the listless longs, and then take that market share. Whether that happens in May over the next month, is up to the crystal ball and Zeus. But I think that's exactly right. It's like when it comes to the big guys, it's like the pain trade is where they make all the money. How can they squash all the odd lot retail money and capture that market share? And then after there's been a big downward price slide or drop, then they start driving price back up, exactly what the retail community kind of expected.
Samson, I saw you going on and off of mute for a little while, so sorry about that. Did you want to say something or add to this?
No, I just had it's not necessarily a 2020 forecast or prediction, but it's going to be interesting as we look into 2020 with the number of fiat digital currencies, stable coins that come out. So it'll be the 2020s as a decade, and particularly this year will define. It's going to be Bitcoin versus the digital currencies, because We were just looking at Yubin coming out of the Monetary Authority of Singapore, Sovereign from the Marshall Islands, Inthanon from Thailand, the Sand Dollar out of Central Bank of the Bahamas, Turk Coin from Turkey, Paymoon from Iran, and of course Amber Amber is a joint digital currency from the United Arab Emirates Central Bank and the Saudi Arabian Monetary Authority. And so it'll be interesting to see how Bitcoin versus all these other digital currencies and stable coins compares, particularly in comparison to the tokens. And when we say tokens, we mean like equities, commodities, and in-game money or virtual dollars in video games. And so it's not a prediction, but I think that we're going to, as the economy goes to adjust, we have a market correction, i.e. a recession, we're going to see that Bitcoin is going to, it's going to be Bitcoin versus digital currencies, stable coins, and tokens. And that's going to be very exciting for the new year.
Well, Samson, I gotta say, don't tell my son that V-Bucks aren't real money, because my credit card bill would say otherwise.
I completely think V-Bucks have so much. I mean, I accept them because I've got nieces and nephews who play Fortnite and other video games. So I agree with you. V-Bucks are as money gets.
But you know what I mean? Like they're not a blockchain. I know it sounds goofy. Like they're not a blockchain. And they're no real currency, but I'm guessing those that are gamers or parents or both. When I said V-Bucks, I didn't need to say the game they were associated with. Many of us probably know, and it's like you know kind of what they cost. Where I think what Samson said, I guess when I hear the year 2020, it's breathtaking to me. Just in that alone, forget Bitcoin, forget gold, forget anything. But I think simply as a, I guess, push notification, if Samson wanted to restate those and have those out about all the different sovereign currencies that are introducing some sort of blockchain as an acceptable means of transacting, that in itself, whether Bitcoin goes up or down, I don't know. But like that in itself, sometimes people, I think, need to take a step back and be like, look, wherever Satoshi is, whoever he is, wherever, whenever he is, I think he would be looking down like, wow, man, my idea actually made it. I mean, did you hear that? I mean, I'd like Samson to repeat that, not literally, but all those countries that you just said are going to accept something called blockchain, a digital currency. I mean, I can't see it. What is it worth, right? It's a scam, right? I mean, they're all scams. That's what I heard 5 years ago. But now you have 10, 20 countries that are accepting these things, these digital things, because we can all see our credit card moving back and forth, or we can all see PayPal, like we really can't. But I guess that in itself is mind-boggling to me, like in a good way, like a positive way.
Yep. Guys, I mean, look, it's just a matter of time. There's this massive wealth transfer upon us, from generation to generation, and millennials will have quite a bit of money at some point. And if you look at the breakdown, and I think this is like investing.com or something like that, I can't remember what it was. They did a breakdown of, how each generation actually invests and deploys capital. You think of millennials, it's 15.1% real estate versus baby boomers, or 11%. Crypto for millennials is 9.2% versus baby boomers 3.1%. It's just a completely different game. They're investing in more technological stocks like the Teslas of this world, and the boomers, I shouldn't say boomers, sorry, that's a negative connotation nowadays, so I apologize to anybody who's in that time frame. But you can just see that as things evolve and as the money shifts and where people are distributing their assets right now, it's just a matter of time before digital assets takes over. And we haven't even gotten to the tokenization of assets that have value that are going to be completely unlocked that we've never had access to before, whether it's intellectual property or real estate. It's going to be a transformational and monumental shift in in value from generation to generation. So it's going to be interesting to see. But I don't know if it's going to happen next year or the year after, but I think the writing's on the wall in terms of this will happen. And I think, these events are just, like the halving, et cetera, just catalysts to be able to bring awareness, because the second that, the demand exceeds supply in anything, the price reacts in a very positive way. And once people realize that there's a finite amount of something, I don't care if it's a Beanie Baby, because there's only 5 of them in the world, or it's a Bitcoin that is 21 million that will ever be. Once people really wrap their heads around that and understand it, the value of that particular asset, no matter what it is, will typically increase if the demand exceeds the supply. End of story. So,
agreed. It's like, when is Crypto Kitty for the whole space going to happen?
I think there should be an organization that brings more data and transparency to the space, and then, maybe CoinGenius can help with the mass adoption components there.
That's the
Hey
plan.
guys, I have to run, but more importantly, forget Bitcoin, forget gold, forget blockchain. I'd like to wish everyone a happy holiday season, Christmas, Hanukkah, Kwanzaa, New Year, if I don't talk to any of you guys before then. I won't be available next Wednesday, but the week after that, I can talk.
Thank you for that, Steve. And just as a reminder, we will not have Genius Wednesdays next Wednesday since it is the holiday, but we'll be picking it up again and on through 2020. Very excited for all of these conversations. And I'd just like to say happy holidays to everyone for CoinGenius, with CoinGenius, Team Genius, listening to our analysis, and hopefully, the whole world who starts to see that we really want to help bring in transparency to the space so that you guys can understand what's going on.
Absolutely.
All right.
Merry Christmas.
Bye,
Happy New Year,
everyone.
everybody.
Thanks, everyone.
Bye-bye.
Happy holidays.
Thanks, guys.
Bye bye.